Have you ever wondered how the Federal Reserve, or the Fed, juggles the dual responsibilities of controlling inflation and fostering economic growth? It's a question that puzzles many, but the answer lies in a carefully crafted strategy that the Fed employs. The Federal Reserve's strategy is akin to a tightrope walk, a delicate balance between two equally important objectives. On one hand, the Fed aims to control inflation by subtly raising interest rates. This increase in rates tends to slow down spending and borrowing, acting as a brake on the economy and preventing prices from spiraling out of control. On the other hand, the Fed is equally committed to supporting economic growth. To do this, it ensures interest rates remain low enough to stimulate borrowing and investment. This fuels the economy and promotes growth, acting as an accelerator when needed. But how does the Fed strike this balance? They do so by keeping a close eye on various economic indicators. Employment levels, consumer spending, and inflation rates are just a few of the key factors that the Fed monitors. This constant surveillance allows the Fed to make informed decisions about future monetary policy, adjusting their strategy as needed to respond to shifts in the economy. In essence, the Fed's strategy is a dance between controlling inflation and supporting economic growth. By increasing interest rates, they aim to cool down the economy and keep prices stable. But by keeping rates low enough to encourage borrowing and investment, they also foster economic growth. The takeaway here is that the Fed's strategy is a carefully orchestrated balance, designed to ensure a stable and prosperous economy. It's a complex process, but at its core, it's about balancing the needs of the economy and ensuring stability for the long term. So, to recap, the Federal Reserve's strategy involves the careful management of interest rates to control inflation and support economic growth. They do this by monitoring key economic indicators and adjusting their approach as necessary. It's a dance of balance, a tightrope walk, but it's one that the Fed navigates with skill and precision to ensure a prosperous economy.